Okay, let's talk about something positive that came in after market hours yesterday. India's December consumer inflation came in slightly lower than expectations, also lower than the previous reported print. And there was some cool off in both food inflation as well as core inflation. We have Latha joining in with the details. Latha, I don't want to be a pessimist, but the thing is, this is data, rear view looking data, given what we're seeing on crude oil prices now. But anyway, what does the fine print tell us?
No, I think it's a very good set of numbers. At 5.22, I had got an average of 5.3, but there were quite a few on the street expecting 5.4, poll numbers which came after I completed my poll. So I was worried that it would overshoot, and actually it's undershot considerably. As well, it's now 3 months in a row falling. It was 6.2 in October, 5.48 November, 5.22 December. And if you looked at the nowcast numbers for January, it is expected to be much more sharply down. So we are going to be 4 point some decimal point average for Jan, Feb, March. So I would consider it a good number. The big contribution has come from core. That was expected to remain at 3.7 or go to 3.8, non-food, non-fuel. That's actually come at 3.6, largely because of gold and silver, though not only because of that, but that's again an important contribution. And then let me come to food. Now, food is good in the sense it's 8.4 compared to 9.04 in November. But, our poll still threw up 8.3. So even the economists were kind of disappointed by the food prices not falling enough. Now, vegetables actually did the heavy lifting. They are still 26% higher year on year. But, look at the way it has fallen. All the way from September, this is one of the lower numbers we have got. And if you only took tomatoes, onions, potatoes, the top set, it's actually fallen considerably and is expected to really crash in January. Where is the pain coming? Edible oils. Edible oils, we raised tariffs for the benefit of farmers. And global edible oil prices have been going up, and that's getting transferred. So look at that, a year-on-year rise of 14.6. Fruit and eggs have also hinged up. I'm giving you all the numbers where the inflation is above 6.5%. And that's cereals. See, you wouldn't expect that there will be a month-on-month rise in cereals as we enter the post-Kharif season harvest coming in. But wheat prices have gone up. So I'm a little worried about this part of the food inflation. Nevertheless, veggies are going to be the big relief going forward in Jan. And therefore, the expectation that inflation will finally come down to 4.5 by the time come to, March and then to 4 is very much alive. Just one more detail I must point out. Month on month inflation falls in November, December, Jan, Feb because vegetable prices fall. It usually falls by 0.4%. The expectation, if it was 5.3, was it will fall month on month by 0.5. And you know how much it's fallen actually? 0.6%. Now imagine if you get a 0.6% fall month on month in the remaining 3 months, that would be a good number. So my sense is that the Reserve Bank governor actually gets some space to cut rates as early as February. The street is divided. There are some who believe that he will wait because of even the interest rate differential. But clearly this inflation number, gives space. The former Governor Das was saying that it must align to 4%. But the new governor may say that, so long as it is showing a direction, there is space. So clearly today there's something to cheer for the bond markets.
Okay, all right. So that's something to cheer. And also in the last, 12 hours or so, we have the dollar index that yesterday when we were closing trade, it had breached the 110 odd mark. That's cooled off. I think the last count is around 109.6. That as well will be a little bit encouraging. Looking at some positives, so a couple of them, as Latha said, inflation data looks pretty okay. You have the dollar index that's cooling off a wee bit as well. Let's